If you are waiting for the moment when the signal turns green, then this is that moment. You do not stumble into prosperity, you command it. And right now, ladies and gentlemen, the markets are screaming, gold and silver, your opportunity, your breakout moment. They told you the system would always work the same, that fiat would hold, that monetary policy would self-correct, that inflation was transitory. They sold you comfort as a currency, while the world quietly rewrote the rules of value. You watched the headlines, listened to the economists, nodded at their jargon, but in boardrooms, on trading floors, and behind central bank doors, something else was happening, a recalibration of power. You see, markets don't lie, they whisper, and if you're listening closely enough, you'd have heard it years ago. Gold and silver, long labeled as old world assets, are no longer just a hedge against crisis. They are the narrative now. The tremors aren't coming, they're already here. Governments around the world are sprinting, not walking, into fiscal oblivion. Sovereign debt is no longer just high, it's unsustainable. The United States, for example, is barreling toward $40 trillion national debt, with annual deficits that could choke the GDP. What does that mean for you? It means the money in your pocket is burning, not just in terms of spending power, but in trust. Because once confidence is gone, value collapses, and in that void, only hard assets stand. That's why central banks, yes, the very architects of fiat stability, are hoarding gold at record levels. China, Russia, Turkey, Kazakhstan. These aren't speculative investors. These are monetary institutions arming themselves for what's coming. Ask yourself, why is the very system betting against its own paper? Because the shift isn't speculative, it's strategic. These aren't random accumulations. They are signs of a new monetary world order, one in which gold regains its throne. Now, let's talk about war, the physical kind and the economic kind. From Eastern Europe to the South China Sea, borders are not just lines on maps anymore. They are theaters of risk, and risk demands safe harbor, not stocks, not crypto, not real estate. In times of systemic uncertainty, capital runs, not walks, to safety. Gold is that safety. Silver is that leverage. This is not theory. It's human behavior institutionalized, and while all of this is happening, the U.S. dollar, the world's reserve currency, is quietly under siege. Not by bombs, but by agreements. BRICS nations are formalizing trade settlements in local currencies. Oil contracts are being de-dollarized. New financial infrastructures are emerging where the dollar is not the final word. When that dominance slips, what stands in its place? The answer isn't digital. It's elemental. Gold and silver are not just surging because of fear. They're surging because the architecture of finance is being rewritten. And the new system, it's going to be backed by real value, not promises. But you still think it's too early. You think the breakout hasn't happened yet. Look again. Gold is grinding higher with conviction. Silver has breached psychological levels that held for over a decade. These aren't pumps. These are paradigm shifts. The charts are just the echo of what's happening in the world. Because here's the truth, Mark. It's don't wait for your permission. They don't care about your comfort. They move when fundamentals shift. And right now, every fundamental, from debt to war to de-dollarization, is screaming the same thing. Precious metals are back, not as relics, but as relevance. So the question isn't whether gold and silver will break out. That question has already been answered. The question is, will you be in position when it happens? Because the era of passive investing, of trusting that your pension, your ETF, your banker has your back, that era is over. If you're not positioning now, you're not late. You're irrelevant, and this isn't about fear. This is about foresight. It's about understanding the direction of capital and moving before the herd does. Because when the breakout becomes obvious, it's no longer profitable. So decide, don't wait for confirmation, don't wait for headlines, understand the catalysts, see the shifts and move, not because it's popular, but because it's right. The breakout isn't coming, it's already started, and history will remember those who moved with courage. There's a lie we've all been sold, that silver is second best, that it's the poor man's gold, that it lingers in the shadows while gold shines in the spotlight. But what they never told you is that shadows only exist when something is standing in the light. And right now, silver is about to step forward. This isn't about hype. This isn't a pump. This is math. And math doesn't blink. While the world plays games with liquidity, with credit, with speculation, there's one thing that doesn't lie: supply versus demand. And silver's story, it's about imbalance. Quiet, compounding imbalance. Let's start with the basics. Mining output is shrinking, not stagnating. Shrinking, mines are aging, new discoveries are rarer. Exploration budgets have been gutted by years of depressed prices. And the cost to extract, rising. It takes more energy, more effort, and more money to bring silver out of the earth than it did a decade ago, and yet we need more silver than ever. This is not demand like jewelry. Not demand like coins and collectors. This is industrial obligation. Silver is not optional anymore. It's the irreplaceable conductor in an electrified world. Every solar panel, every EV, every 5G tower, they're not requests. They're requirements, and every one of them needs silver. Pure, conductive, unsubstitutable. You want to electrify the planet. You need silver. You want to transition to clean energy. You need silver. You want smartphones, smart homes, smart cities. Guess what? You need a smart position in silver, because that demand curve isn't just steep, it's vertical. But it's not just growth, it's consumption. Once silver is used in electronics or solar, it's gone. Not stored in vaults, not sitting on balance sheets. It's dissipated, fragmented, unrecoverable at economic levels. Gold gets recycled. Silver vanishes. So we're burning through a finite resource while ramping up demand exponentially. That's not a trend, that's a trigger. And while Wall Street debates whether the breakout is valid, the supply deficit grows deeper, the warehouses run drier, and the price coils tighter, waiting. And here's the kicker. Silver is not just an industrial asset. It's a monetary relic. It still trades like a financial instrument, still follows the tailwinds of gold, which means when gold runs, silver doesn't follow, it leaps. Historically, silver outpaces gold in bull runs. Why? Because it's leaner, more volatile, more aggressive. You don't walk silver up the ladder. You hold on as it rockets, but you wouldn't know that watching mainstream media. They'll tell you silver is too erratic, too unpredictable. What they're really saying is, it's too much power for the unprepared. Look around, the largest mints in the world, backordered, bullion dealers, premiums surging, COMEX inventories drained to multi-year lows. This isn't retail panic. This is institutional silence, the kind that moves billions without a tweet. Smart money is reallocating. They understand that markets don't reward followers. They reward conviction, and conviction right now is about positioning before the deficit becomes panic. Silver is not an if, it's a when, not a gamble, a guarantee written in industrial policy, renewable targets, and global electrification mandates. Governments want green economies, they'll need silver. Manufacturers want scale, they'll need silver. And investors want asymmetric upside in a world of fiat erosion, they'll need silver. So where does that leave you? If you're still waiting for someone to shout go, you've missed the whisper of opportunity. This isn't about being bullish, it's about being awake. It's about understanding that breakouts don't wait for permission. They build in silence and explode in visibility. This is that silent build. This is the pressure cooker phase, the accumulation before the detonation. Because when the realization hits that there simply isn't enough silver to meet the future, it won't just be a rally, it'll be a reckoning. So don't ask if silver's time is coming. Ask if you're prepared for when it does, because the structural shift is no longer theory. It's already in motion, and when silver breaks, it won't knock politely. It'll kick down the door. There's a moment in every chart where the truth can no longer hide. A line gets crossed, a wall gets broken, the silence ends, and what follows is not noise, it's confirmation. That moment is here. Markets speak long before the media does. The headlines chase the candles. The amateurs chase the news. But if you understand the language of price action, you already know. We're not guessing. We're not predicting. We're observing. Silver, for over a decade, was trapped beneath psychological ceilings and algorithmic resistance. The $26 to $30 range was a graveyard. Every rally got choked. Every push got rejected. Traders called it the widowmaker. Investors called it frustrating. But this is different. This isn't a spike. This is a structure. First came the compression, price tightening, volatility evaporating. Then came the breakout, clean, decisive, and violent, not in volume but in conviction. The $30 wall didn't just crack, it shattered, and the retest held like steel. That's not retail emotion. That's institutional footprint. That's conviction capital entering the arena. Price doesn't move on opinions. It moves on imbalance. And when buyers refuse to let price dip back below a key level, they're not buying dips. They're defending positions. This isn't fear of missing out. This is knowing something's coming and getting in before the herd. Zoom out. Look at the monthly chart. What do you see? Accumulation, consolidation, breakout, retest. That's not a fluke. That's a fractal of every major bull run in financial history. It's how gold behaved in 2005. It's how Bitcoin moved in 2017. It's how silver is moving now. And then there's gold. The giant, the anchor of trust in a world losing faith in paper. It didn't need a breakout to prove its worth. It's been climbing, silently, steadily, through noise and narrative. But now gold too is setting up. Not for a small pop, for a redefinition of what expensive looks like. Look at the trend lines. Look at the cup and handle formations forming on the weekly. Look at the wedge patterns compressing over years. These aren't coincidence. These are the fingerprints of inevitability. But here's what they won't tell you. Charts are not about magic. They're about human behavior at scale. Every candle is a decision. Every volume spike is a belief. And when enough people believe the same thing, price moves not linearly, but explosively. You want a target. You want price projections. You don't need a crystal ball. You need history. Every major silver breakout in the past century has led to parabolic moves. From $5 to $50, from $15 to $49, and those weren't driven by social media. They were driven by structural squeezes and technical ignition. Right now, silver has cleared its base. It's now sitting in a new territory, a price discovery zone. The next ceilings aren't resistance, they're objectives. $36, $42, $50. Beyond that, you're in uncharted air. That's where real wealth is built, and don't get comfortable with support. In breakout markets, what was once resistance becomes a launch pad. So if you're waiting for silver to pull back to $28, understand this: the train doesn't reverse to pick up the hesitant. Momentum doesn't apologize, and gold, if it breaks $2,400 with volume and conviction, it doesn't stop at $2,500. It reprices, it recalibrates. It makes room for the next economic reality. $3 0 isn't a prediction. It's a milestone. The trap is thinking you have time, thinking you'll wait until it's confirmed. But the confirmation has already happened. The breakout has already begun. Every session that holds above key levels is another nail in the coffin of denial. Because markets are cruel to the slow, they reward speed, precision, courage, those who act not after but during the shift. And this is the shift. The technicals aren't just bullish, they're historic. The breakouts aren't just breakouts, they're transitions from disbelief to conviction, from patience to profit. This is the moment people will look back on and say, that's where it started. Not when CNBC said it. Not when the banks caught on, but now, quietly for those watching. So stop watching. Start moving, because breakouts don't knock, they break in, and by the time the world realizes, they're already gone. There is a hidden imbalance in the market, a distortion so wide, so blatant, that it borders on absurd. But because it's been there so long, people stopped questioning it. They started calling it normal. That's how deception works. It doesn't shout, it settles in. The gold to silver ratio, over 90 to 1. Let that sink in. For every ounce of gold, it takes over 90 ounces of silver to match its price. Not its utility, not its supply, just its price. A ratio that has existed not because it makes sense, but because the market has tolerated the lie for too long. Historically, the ratio hovered around 60:1. Before that, in times of true metal-backed money, it was 15:1. Even nature itself whispers the truth. Silver is mined at roughly 8 to 10 ounces for every ounce of gold. So you tell me, how does a 90:1 price ratio reflect reality? It doesn't. It reflects manipulation. It reflects neglect. It reflects a system that has overvalued narrative and undervalued substance. But imbalances don't last forever. They stretch, they strain, and eventually they snap. And when they do, the snap isn't polite. It's violent, swift, inevitable. Gold has had its run, and it's not done. But silver hasn't even started breathing yet. That's what happens when a coil tightens for too long. When value is suppressed, when attention is elsewhere, when ignorance replaces curiosity, momentum builds underground. And here's what people forget. Markets seek balance. That's not philosophy. That's price mechanics. When gold moves and silver lags, the ratio stretches. But when silver finally catches up, it doesn't walk. It runs. It plays catch-up with vengeance. Look back at every major rally. In the final phase of gold's move, silver doesn't just rise. It outperforms. By a factor, by violence, and that's not speculation. That's historical fact. In 2011, the ratio dropped below 30:1 as silver shot to $49. In the 1980 bull market, it fell even further. These weren't anomalies. These were snapbacks, price correcting itself like a whip. Because value doesn't care about delay, it demands recognition. And silver is overdue. But this time is different, because this time the imbalance is wider. The industrial demand is higher, the supply is tighter, and the leverage much greater. So if the ratio merely reverts from 90:1 to its long-term average of 60:1, and gold stands at $2,400, silver should be trading at $40. But if gold moves to $3,000, $3,500, where does that put silver? You're not talking about $50 silver. You're talking triple digits, not because it's fashionable, but because it's mathematically inevitable. And the masses will say that's impossible, because they can't imagine what they've never seen. But markets don't reward imagination. They reward positioning, and right now, positioning in silver isn't just smart. It's strategic, because when the ratio normalizes, it won't ask you for permission. It won't wait for your analysis. It'll move, and it'll leave the unprepared behind. Again, you see, everyone wants to catch the breakout. But very few are willing to stand in the imbalance before it corrects. That's what makes silver the trade of courage, the metal of conviction, not the one that screams, but the one that waits, until it doesn't. And that waiting, it's over. The ratio is flashing warning signs. Gold is firm, silver is stirring, and the gap between them is trembling. One spark, one push, one collective realization. And the correction won't be gentle. It'll be explosive, because silver isn't just undervalued. It's mispriced, criminally so. And when the market wakes up to that, the run won't be linear, it'll be parabolic. It'll burn through ceilings like paper. And the ones who understood the ratio, they won't be watching, they'll be collecting. So ask yourself, do you want to react after the breakout, or position before the storm? Because normalization isn't a maybe. It's a matter of when, and when it happens, you won't need charts. You'll hear it, you'll feel it, and if you're smart, you'll already be in. People keep asking, when is the right time? As if history waits. As if markets send invitations. As if opportunity stands outside your door knocking politely. There is no bell that rings at the bottom. No banner that flies at the breakout. What there is are signals. Quiet, consistent, undeniable signals. And right now, they're everywhere. Gold has held firm despite tightening cycles. Despite rate hikes. Despite temporary dollar strength. And still it refuses to fall. That's not a warning, that's a message. You don't suppress strength like that unless there's deep underlying demand. not from speculators, from institutions, from nations. Silver has broken past decade-long resistance. That's not noise. That's momentum backed by math, macroeconomics, and industrial reality. And every day it holds above $30, the launch pad gets stronger, the pullback crowd gets quieter, and the window for quiet entry shrinks. But you're still asking why now? Because this is the moment before the mainstream sees it, before the headlines declare it, before the FOMO frenzy takes over and premiums surge and spreads widen and delivery delays hit weeks instead of days. You don't make money when it's obvious, you make money when it's early. This isn't about timing the top. It's about recognizing the bottom of disbelief. People still think silver is just a volatile cousin of gold. They don't see the deficit. They don't see the warehousing crisis. They don't see the solar manufacturers locking in long-term supply at above market prices just to stay ahead. They're too busy watching tech stocks dance and central banks pretend the fire is under control. But it's not. Inflation may have cooled, but the causes haven't disappeared. Deficits are growing. Debt is unsustainable. The cost of capital is choking the real economy. And the solution? Print more. Stimulate more. Erode the value of every dollar, euro, and yen until people stop questioning where the wealth went. And while they play with policy, gold waits, silver builds, momentum tightens. This is not the calm before the storm. It's the storm disguised as calm. You want to know what smart money looks like. It buys when it's quiet. It enters when others hesitate. It positions not based on headlines but on conviction. That's why central banks are buying gold with both hands. That's why the COMEX inventories are bleeding silver. That's why premiums on physical metals are rising even when spot prices seem flat. Because the people who move markets know, now is the moment, not after the explosion. Not when silver is at $50 and everyone is rushing to claim they saw it coming. Not when gold is at $3, $200 and articles are calling it the Great Rotation. By then, it's too late. By then, you're chasing. By then, the asymmetric upside is gone. So don't ask if the move has started. Look around. Gold has formed a new floor, not a ceiling. Silver has shaken off the rust and is stretching its legs. The gold-silver ratio is preparing to normalize. The next cycle isn't just forming, it's pressurizing, and this is your decision point. Because moments like this are easy to ignore. They don't shout. They don't come with red carpets. They're wrapped in doubt, disguised as risk, hidden behind decades of complacency. But those who see really see, don't wait for confirmation. They create position. So the real question isn't why now. It's why are you still waiting? Because when the charts align, when the macro supports it, when the fundamentals demand it, and the price action confirms it, what more do you need? You don't need permission. You don't need perfect timing. You need to move with clarity and commitment, because this is not a normal market. This is a reset, a repricing of reality, and the metals, they're not just stores of value. They're votes of no confidence in the system that failed to protect your future. So vote not with fear, but with foresight. Now isn't coming, now is here. So what will you do? Will you watch and say, I wish I had? Or will you take action? The signals are aligned, the chart patterns confirm, the structural drivers persist. This is your breakout window.